Aloha tax students, this is your teacher Roy with a video walkthrough to prepare the Schuyler and Walter Black 2025 tax return. What you're looking at is our Lamaku class homepage. And of course, for every single assignment during the semester, make sure you look at the instructions for that assignment. So let's take a look for the Black tax return. We've already done it here in the previous week's homework at Cengage in the simulated tax return. So we're doing the same tax return, but this time using ProConnect. And you should already have your account from a previous assignment. Let's take a look at the assignment. Go ahead and download the instructions for the assignment that's in Cengages. You don't have to go back into Cengages. You can look at this PDF file here. And here we'll have a video. Right now it shows 2023, but I'm recording a new one right now for you for 2025. And here is the solution. You may want to already open this up. And as you enter information in ProConnect, generate a tentative return and compare it to the solution to see if you're on the right track. So again, let's take a look at the facts that you can download. Again, you don't have to go back into Cengage because all the facts are here. We're dealing with a couple, married filing joint. We have a couple dependents, the parents of the dependents. And they sold their home during the year. We're going to assume that any current address of the taxpayers is here in Hawaii, not in Las Vegas. So typically when you see a Las Vegas address, go ahead and assume the address is the same, but the city is Honolulu, Hawaii, and our campus zip code is 96816. Information for their sale of the home. Here they have a rental unit that they also use for personal days. So we learned here in chapter 4, we call this a vacation home. And we only take a percentage of the rental days compared to the total days for deduction purposes. Of course, you report all of the rental income, but as for these deductions here, you only can take a percentage based upon rental days over the total days used for the year. Schuyler has a business, a car wash, so we're given her information here. And let's see, Walter has a non-business bad debt. We have educational benefits here, but it all went to the costs, and there's no excess benefits, there's no excess costs. So it's a wash. We can pretty much ignore this on the tax return. We have a hobby income here, and we learned in chapter 3 or 4, hobby income is reportable, but hobby deductions are not deductible. Okay, so I've already done the return in ProConnect. So log into your ProConnect account. Here's the welcome screen you'll see. And you first got to set up the Blacks as a new client. So under Client tab, add a new client. Let's see if I can find, the Blacks are not here. You can see I have like 36 clients in this account. So let me resort them in alphabetical order by clicking on the header. So here is Walter. I set up Schuyler as a client, but I put everything under Walter. I really wish ProConnect allows us to set up a couple under both names, yeah, but you only can set it up as with one name, and the other spouse is entered in the tax return. But here I have Walter. And if you want to, of course, you're going to add him as a client. And if you need to make any adjustments, you can edit the client under this drop-down list over here. And here's what you would have entered here, yeah? His name, birth date, and social security number. Okay. So let's start the return. So under tax returns, you would create a tax return, but you can see here I've already finished the return or started it, yeah? So I can go back in by clicking on the return name. Notice how I put in Skylar's name in the return name. Yeah, all tax returns you should name it so you can easily identify not just who's a taxpayer but what year. Here again, also the year, but I can just identify this by just looking at the tax return name. And of course, it's our problem 4-2 from our textbook. So let me go in. So it starts off in this input screen for me, but you would probably start off in this profile tab here, indicating that it's going to be a federal return. And we're not going to e-file, but I'm still leaving it on here. Of course, almost 90 something percent of tax returns filed are done electronically. And you would give the taxpayer, even though it's filed electronically, a copy of the return, either printed on paper or, in our case, we're working with PDF copies of the return. And let me, well, here's Hawaii, yeah? And I could even electronically file the Hawaii return. If you don't see a state return, you can pick one from this drop-down list. So that's under this profile tab. Let's go to the main tab here for inputting information in the return. And on this table of contents, you can see all the different categories of tax information. And if you want to narrow down the specific area, you just click on the item over here. Okay, you can collapse this whole table of contents by clicking on this arrow. Right now, I'm under the General tab. You can see that here I can bring back that table of contents by clicking on this button. I'm right over here, yeah, under this category. And this first one for client, we're preparing a Hawaii return. The blank said moved to Hawaii during the year. So generally you wouldn't say full year residence, but just to keep things simple, I'll check off full year. They're filing a joint return. Here's Walter's name that we've already entered when we set up the client, including his social security number. We're told Walter is a teacher, pick up his occupation. We've already entered his birth date. And he's not a dependent, so not applicable. Not blind. Here's Skylar. You have to enter her name, social security number. She has her own business, so self-employed is the occupation. Birth date, not a dependent, not blind. Enter their address as given, but city, state, zip code, again, anything that says Las Vegas, pick up Honolulu, Hawaii, 96816. We can leave the contact information blank. In a real life situation, we would complete this taxpayer authentication as a due diligence checks as a professional preparer. Yeah, but we're going to skip that since we don't have this information here. Moving on to the next step is to claim their parents as a dependent. So when you fill in the name up here, it will create a tab just for that dependent. So this whole screen is just for Rebecca. Make up a birth date that's reasonable for their as an elder parent. We're given her social security number. The relationship is parent. The parent dependent does not have to live with the taxpayer. So here, other dependent, not a child, not living. Yeah, she's living in her care home, I believe. Yeah, and again, that's an exception for parents as a dependent. They don't have to live with the taxpayer. I think that's all we need to fill in. And then, yeah, this won't matter. We're doing the Hawaii return, and their income is above a certain level to qualify for this tax credit. And then for the other parent being claimed, he does live with our taxpayers. Again, that's all we need here. And again, we're assuming that we meet all the other tests to claim dependence that we had learned back in Chapter 1 last semester. And each of these dependents will help the taxpayer qualify for a $500 other dependent, other relative credit. So that's all I think we need here. So um, payments. Let's look at the facts again here. Did they make a payment? Now, why is this highlighted? You can tell it's being used because it's, well, right here. Well, there's going to be a penalty, at least for Hawaii, because based upon not enough taxes withheld. Again, Nevada doesn't have a state income tax, but because we switched to Hawaii, Hawaii does have an income tax that they haven't yet paid. So probably there's going to be an underpayment estimated tax penalty automatically calculated by ProConnect. And we'll see that when we take a look at the return. Let's take a look at income. Of course, the easiest one to enter is the W-2 income for Walter. So you're basically copying information off of his W-2 form here, making sure you pick up all the amounts. Yeah, this box 12, box 13, and Hawaii would be again down here, but again, no taxes were withheld, and that's why they owe a lot on their Hawaii return and possibly are being penalized. So here is that W-2 information. Okay, so make sure you pick up all that from the W-2 on the PDF file, box 12, checking off box 13 here. He's participating in his employer retirement plan. Now, do I have something for Hawaii? I left this blank. It doesn't hurt that wage income is still going to be taxable to Hawaii even because they're a resident, yeah? But if you did have Hawaii taxes withheld, it would be entered possibly over here, or better yet, over here. Yes, state income taxes withheld. Okay, so that's W-2 income. Let's take a look at the rental income, keeping in mind that this is a vacation home and then it was rented out for 172 days during the year, and our taxpayers use it for 28 days. So we'll let the computer figure out how much of this deductions are going to be deductible. We're told that this rental property doesn't qualify for the qualified business income deduction. Yeah. There's a test whether you put in so many hours as the owner landlord to be able to qualify for this, but here we're told we're not qualifying. So that would be entered on a schedule letter E. Yeah, rental, schedule E. So here is one rental, and if you need another rental, you can click on this plus button. So when you are on a rental tab here, all of these sub tabs would be just for this one rental property. Here, this ski condo in Utah. Keep it in Utah. Don't move it a ski condo to Hawaii. Okay, and the type is a vacation home. Yeah, because of that personal use. Here's the days that they had rented it out. Now, to enter the days they used for personal use, it's not on this screen here. Nothing else except for any possible Hawaii information. In fact, probably Hawaii wouldn't have an ID number because the property is not located in Hawaii. Yeah? So personal use here. And here's their personal use days. I don't think it matters whether you check this off or not. We learned here in chapter 4, if there is a loss, possibly the loss based upon the percent of personal days used compared to total use may not be deductible, but that deferred loss can be carried over to a future year. And this kind of ties into maybe some unused costs being carried over. I don't think it matters whether you check it off or not, but I checked it off. It doesn't hurt, at least in our assignment here. Okay, so the main numbers are entered under this income statement tab for our ski condo. So make sure you pick up all of the rent. Now the deductions, because it can be used for both rental and non-rental, we'll put that type of costs under this indirect column. Yeah, all of the costs. Here, if you don't find a category of the cost up here, you can put it under this other expenses here. And I itemized out the association dues here. And if there was another one that's uncategorized, you can put it down over here, the next line. Yeah. Now, what would go here under this direct column is if you have a cost specifically for the renters, like maybe advertising for renters, because you wouldn't advertise for your own use. Yeah. So that kind of cost would go here and all deductible. But all these other costs are shared between the rental days and the personal use days. So make sure you pick it up in this indirect column. Um, let's take a look at the business income for Skylar. And that's this information over here. Okay, her Schedule C. We're also going to pick up a home office deduction with this information over here. So let's look at our Schedule C. Under income, under business income, Schedule C, here's one Schedule C. And again, if you need another one, you can click on this plus button. All of these tabs up here pertain to this one Schedule C that's highlighted. So when you enter the name here, it'll go up as a new tab. So all of this is given to us. Our business is located here in Hawaii. We're given the employer, federal ID number, the type of business. You can make up a Hawaii ID number. And because the business is located in Hawaii, this would be the so-called General Excise Tax License Number. And to learn more about Hawaii General Excise Tax, you would take our college's Accounting 132 class. That's Payroll Accounting and Hawaii General Excise Tax. A very important thing to learn if you have a business here in Hawaii and you tie in that excise tax to the business. But here we're only talking about income taxes and not general excise tax. Cash method of accounting, we don't really deal with inventory, even though we sell possibly some sundries. So in other words, whatever small stuff we buy, we deduct it right away, even though we're going to be selling it. I think that's the only other thing we need for our list here under this business information tab. The main tab, of course, is to enter the dollar amounts under this income statement tab. If you take a look at this column, I actually did this return last year. So it's keeping track of the amounts from last year. It's always nice to compare one year to the next year, yeah, to see if there's any major difference. And in your mind, you need to satisfy why there would be a big difference. Here's that sundries income. I broke it out separately from her main car wash income. And then most expenses listed in alphabetical order. I don't think there's anything tricky here. The tricky one would be depreciation, which we're going to learn in a couple of chapters from now. Under taxes, I list down here as an itemized other taxes and license, yeah? And then subtotal and put over, my screen keeps jumping around. Put it over here. And most of the other expenses, I kind of grouped it together. Let's see what's under here. If it doesn't fit in any of the blanks above, you can use this other at the bottom of this section. Looks like I only have one item here. The sundries costs, yeah? And again, I'm not too strict where in the Schedule C you put it, as long as the total comes out to the correct total. Okay, so that's Schedule C. And then we have that, let's look at the facts here. We have a non-business bad debt from lending $5,000 to Walter's friend. And for sure, we are not going to get any money because our friend has declared bankruptcy. And again, there could be money coming in, yeah? But here, Walter expects nothing. Now, if you do expect something, you cannot take any loss yet. Only in the year when the non-business bad debt is totally worthless. Yeah, December 31st of that year, can you claim the loss? And this loss, we learned, is classified as a short-term capital loss. So let's go find that in ProConnect. Here under Schedule D, right, capital gains and losses, under this subcategory, we'll come back and talk about the sale of the home, but here is the non-business bad debt. Here's my description, yeah, uncollectible personal loan. We were told that it was lent back in 2020. And then here is the date you use in the year it goes totally worthless, yeah, end of the year. We didn't get anything, so no sales price, but the cost is how much that was lent. Now to force this to be short term, you can see the holding period is more than a year, yeah, but to force it to be short term, we got to go into the details for that sale. So I guess somewhere here, I think I need to check off this is for Walter. Now, how do I show this is a non-business bad debt? I don't see any checkbox here. Is there another tab? I'm trying to find a place where I indicate that this is a non-business bad debt. I'm on this general information here, but if you take a look at this tab here, again, all of these tabs pertain to this highlighted item here, yeah, the uncollectible non-business bad debt. So here, Schedule D is a checkbox to indicate this transaction is non-business bad debt, forcing it to be a short-term capital loss. Okay, so that's a $5,000 loss. Now the other capital gain or loss, really capital gain, is the sale of their New Hampshire home indicated by this 1099-S form. Typically, it would be generated by the escrow company that handled the sale, showing you the date of sale this year, the sales price. This doesn't show the cost. Typically, you got to go back at the date they had purchased the property and look at the escrow statement generated on the purchase, showing you how much they paid and possibly any costs that you can add into that. We're given that information right here. $80,040 is the cost. They also had spent improvements, like maybe a major home renovation or expansion. Yeah, that can be added or capitalized to the cost over here. And not shown on the 1099-S, you have to look again at the escrow statement, closing statement, to see possible selling expenses. It's $31,610 that can be deducted. If you need to learn more about reading an escrow statement, either the purchase or the sale, take a look at the videos for Chapter 4. Again, we covered this topic last semester, but there should be a video showing you how to interpret that escrow closing statement. Here, we're just given the amounts in the narrative form. So on Schedule D, we're looking for here this sale. And again, you can create a new sale by clicking on a button here, this plus button. Let's go back to the general information for the home sale. The location of the property. We're given this date of purchase. This date of sale is on that 1099-S form. Sales price also on that form. The costs, not on the form, we were just told it's made up of these two amounts here. Okay, so I break it down as an itemized schedule and totaled here. Selling expenses, I guess I can put this as a joint, yeah, the couple. Now, to indicate that this is the sale of their personal residence that qualifies for a 250,000 exclusion of the gain, or in the case of a married filing joint couple, $500,000 exclusion, you can see a tab up here for sale of home. And you gotta checked off here, mandatory. It's a sale of their home. And we've met that 2-year holding period, ownership and occupancy. And we got the 1099-S form. I think that's all we need here. Okay. And what else do we have? Let's go through the facts. Okay, we took care of the home sale. We got the rental income. We got the business income. We got the non-business bad debt loss. We talked about educational benefits. Nothing to report here based upon these facts. Here is a hobby loss. And we got to pick up the hobby income. But none of the hobby expenses are deductible. So let's go find this $850 to be inputted in ProConnect. Under miscellaneous here, miscellaneous, right here. Hobby is called activity not engaged in for profit, and the gross income. Yeah, no deductions deducted anywhere in the return. Let's see if there's anything. Oh yeah, we need to claim the home office. So under deductions, there's a separate category here. Remember, we had Schedule C, income and expenses under income, but the home office is under this deduction category. Business use of home. We tie it into our Schedule C, and there's only one Schedule C, the car wash. Square footage for business use out of the total square footage, and the only expenses we're given for their home use is the rent they paid for their home and utilities for the home. Okay. Remember we sold that home in New Hampshire? They owned it, yeah? Here they're not owning their home. But if they had a home office deduction back in New Hampshire, possibly you cannot use all of that $500,000 of exclusion. Yeah, that would have, and that's not the case here, so we don't have that complication. And of course, if they move out of this home here, they're not selling it because they're renters. Yeah, but let's see the effect on the return by entering this as a home office deduction. At any time, you can always just click on this review results, review return button, and it'll generate a tentative return in this window here. And you can jump to the form that you want to see if that's being filled in versus looking at all the different pages here. Of course, the main one is the 1040 form here. Yeah? Let me maximize my screen. So we have Walter and Skylar, their Hawaii address, the social, this checkbox. Let me go back and show you where this new question is being answered. Back here under input, I think, under general, client info. Is it checked off already? Looks like it's a default here, yeah? Checked off. I probably should check this box right here, lived with spouse, to be sure, yeah? This again is a new question for 2025. Let's go back to our 1040. And then we have our two parent dependents, one that lived outside of the home, the taxpayer's home, and one lived with the taxpayer. Here, each qualifying for that $500. So the total credit is this 1,000 you see over here, calculated on Schedule 8812. Walter's gross salary. This 450 is coming from Schedule D. So let's take a look at Schedule D. Here's that short-term, non-business bad debt, total loss, total short-term loss, and the other transaction is the sale of their home. Now, these amounts are coming from Form 8949, yeah? 8949. So that should be the next page over here. So short term, here's the detail for the non-business bad debt. Okay, there's no code for non-business bad debt. It shows up as a short term. But if you take a look at the backside for long term, you have code letters here. I believe the E or the H, I can't remember which is which. One is the home gain exclusion, the $500,000, the 500,000 you see here, and the 31,610 is the selling expenses. That's one of the other letters over here. So proceeds minus the cost minus the selling expenses and exclusion gives you the taxable gain. So this 4550 long-term gain, this 5,000 short-term loss, both are then transferred to the Schedule D and combined together to give you a net loss of $450. And as we learned last semester, up to $3,000 of a capital loss can be used to offset other income, as shown on the 1040 form here. This net capital loss offsetting other income here, or the salary income. So the other income is coming from a schedule number 1, schedule 1. So here is Skylar's net business income. Here is the net rental income. And here is the hobby income. Yeah? And then subtotal and put back on schedule 1040. You notice when I point to the numbers, it's clickable. So let's say I want to go back to the input area of Schedule C. Not showing up Schedule C. I will just click on this here to see Schedule C. But maybe I need to make a change on the Schedule C. So if I click on it, and let's say, I guess here, and now I look at the input screen. I'm back on the Schedule C input screen. Yeah, I didn't have to go back and click here. Okay, so that's true for anything you see clickable on this tentative tax forms over here. Okay, let's look. How do I close this? And Schedule E. Well, let's look at the schedule. So Schedule C. So all of this was entered by us. What was not entered by us is this amount right here, the home office deduction calculated on this form 8829. So is there a 8829 right here? So we entered the square footage, we entered the rental costs and utilities, and it took a percentage, looks like it's 7% business use to figure out what's the home office deduction that's carried to the Schedule C and deducted. If you remember in a previous assignment, because we had a loss here in line 29, you couldn't make the loss bigger by claiming a home office deduction. But go ahead and still calculate it anyway because you can carry over and the software will remember to carry it over to a future year to offset any net business income you have. So this profit of the business is reported both back on the 1040 form, like we saw on schedule number 1, through schedule number 1, but also you got to pay self-employment tax calculated on schedule SE. So here's schedule SE, and they give you a small break by discounting it to 92.35%, then multiplying it by the Social Security tax rate and Medicare tax rate here to get the total self-employment tax for Skylar. But because this is such a big hit on our taxpayers, the government gives you a break by allowing you to deduct, not directly off the tax, but claiming a deduction of $490. And that's reported on the back side of Schedule number 1. Schedule 1 front side is additional income. Schedule 2 back side is that 50% SE tax deduction. Yeah, they call those deductions adjustments. Looks like that's the only adjustment. So now this is deducted on the 1040 form. That was all from Schedule C and SC. Let's take a look at the rental, Schedule E. Just one rental unit. The type 3, remember that's a vacation home where you have personal use, so you cannot deduct all of the costs. So here is the business allocation. Now somewhere in this worksheets here should be how they calculated that amount. Do you see it? Here. Gross costs looks like 86% business or rental use extended out to the amount that's deductible on the Schedule E. Now, if you have itemized deductions like home mortgage interest and real estate taxes, I don't think we're given any real estate taxes, that can be claimed as itemized deductions. But in the case of our taxpayers, their standard deduction is bigger than their itemized. Okay, so we're not using it at least this year. Let's take a look at, let's go back to Schedule E. Okay, so here's the net rental income reported back on Schedule number 1. What else do we have here? 1040 form. Okay, let's see. Adjusted gross income, carry to the top of the next page. And then here's our standard deduction for married filing joint couple. And now, automatically calculated is the qualified business income on the Schedule C. We didn't take any QBI deduction for the rental, but here it's automatically calculating for Skylar an additional $1,288 of not even though this is a business related deduction, it's not a business deduction. Business deductions will go back on Schedule C. So this one is not quite as good, like let's say paying business rent or paying business supplies. This only reduces income tax. It doesn't reduce self-employment tax. Hawaii doesn't have a QBI deduction. Yeah, so now how is it figured out? It's figured out on this form 8995. 8995. This is not the Schedule C income. This is qualified business income. So how did they figure this out? So again, there's a worksheet somewhere right here. 6,928 is the Schedule C business income. But remember we took a deduction for half of the self-employment tax. That's related to the Schedule C income. So here, that difference is now the QBI income reported on that form 8995, to which we take 20%. Also, there's a limit. Here's taxable income, 20%. And we take the smaller of the two, and that's your QBI deduction you see on the 1040 form. Where's my 1040? Here's QBI. Now, all those new deductions that became effective for 2025, no tax on tips, no tax on overtime, um, interest deduction for new car loans, yeah, all that would be on this Schedule A1. And we got none of those for the blacks for this year, so nothing here. Um, Taxable income, and because it's under 100,000, this number is automatically calculated based upon the tax tables. So here's the tax liability for the whole year. Here's the two $500 other dependent credits. Net tax, income tax liability, $2,942. Here's more tax, but it's the self-employment tax on Skylar's business income, $979. Okay, total tax liability, and Walter already paid through his W-2, $4,500. So they're overpaid, getting a refund, $579. Okay, this is your check figure. You got to come out to that number. Your name should be showing up over here as the preparer. Possibly this third party, since we were accepting the default. But your name here as the preparer when you had set up your ProConnect account, and any office name you had set up also. If you need to change that, your name, preparer name, and office name, here under settings, back in ProConnect, yeah? Your name over here, your office name over here. Go ahead and maybe use this check return. You can take a look at these diagnostic messages. Anything regarding electronic filing, yeah, you can ignore. Anything regarding paid prepare, since we didn't enter our preparer tax ID number, not your social security number, but a preparer number you would have to apply for with the IRS. Same thing with what they call EFIN numbers. If you electronically file, you need to apply for an EFIN number with the IRS and enter it here in the software. This one here, we were given the ID number for Skylar's Schedule C, and it's telling you it's an illegitimate number, but we're going to use it anyway. Hawaii, I can ignore. This one here, again, if you're electronically filing, you probably would check this off here. And you can refresh the diagnostics, and it would be probably one less, going down to 6 here. You know, again, you can pretty much ignore all these diagnostics. Critical, here's our due diligence that we didn't do. They're telling you as of today, what's today's date? February 4th. IRS still hasn't finalized some things on filing for the year yet. So they're telling you still can file, but there may be changes that they don't know about. Here, Hawaii is so late in terms of adopting any new tax laws. They're telling you that it hasn't adopted the federal laws if they were going to do it at all. Okay, let's generate the return. Under this last tab, File Return, we're going to print to a PDF. You can probably choose different versions, yeah, but client copy, and here, complete return, create PDF. You should have already compared your return, yeah, with the solution right here. You can download from the instructions for the assignment. But go ahead and compare it again. Here, download your return, compare your return. I'm basically going to look at the 1040 form. I won't look at all these preliminary worksheets and correspondences, yeah? So I'm going to look at all these 1040s and then schedules. not the worksheets, comparing your numbers to mine. And for the Hawaii return, I'm just going to make sure that it's there. I won't even look at the amounts, that it's just generating a Hawaii return. If we have time, we may go over some Hawaii tax laws and how they may differ from federal laws. Okay, if it looks okay, upload your file over here in the assignment folder. If you have questions, come to our class meeting. I'm usually in our classroom half an hour before our 6 o'clock start time. Otherwise, you can always email me. Okay, I'll talk with you later.